Hello traders, it's Sunday evening, October 22nd, and it's time for our weekly video. I don't know what the futures are going to be doing overnight. We're still about an hour from having them open. The last pick was ADBE. That was a long that I featured. I still like the stock. Now, I did mention in my last video a couple of things. One was that we had about another week of seasonal weakness. That's going to shift to seasonal bullishness in the next week or so. But I would not be out there trying to pick a bottom right now because the market is very weak. We need to see signs of technical support, and I'm going to get through that in just a minute. But I had mentioned that in my last video, and that's why I've been featuring longs. I did also show another stock that's breaking out of a wedge formation after posting earnings. So we're going to take a look at that also. ADBE, you can see where the stock really was preserving that high, that breakout that we were looking for. Pulled back a little bit on Friday, but here's what the market's been doing the last 5 days. The S&P 500 has pulled back almost 200 points in the last week. That is some pretty dang serious selling. The stock has been able to preserve most of its gains, and it's been able to stay within striking distance of the all-time high. Tech stocks in particular have been hit hard because interest rates have been moving higher. TLT and the bonds have been selling off. They are at a new low. The last time they've been at this level was in 2007. So higher interest rates are definitely weighing on the market. We didn't get any help from Fed Chairman Powell this week. He reiterated the same message, which was higher for longer. So the market didn't like that. Now we do have mega cap tech earnings coming up this week. So ADBE, if the stock is able to recover this long red candle, and if it shows some signs of relative strength, I like it through this horizontal resistance level. So if you take a look at the high from the week, which is this high right here, you can set an alert there, which that's what I'm going to do, GTC. I'll set my alert there. If the stock is able to break through that and we get really nice mega cap tech earnings, this company is not going to be announcing earnings for well over a month. If it can make that breakout, I think that it's got a chance to really run higher. TSLA, Tesla was going to be announcing earnings. This is the wedge formation that I referenced just a little bit ago. And I had mentioned in my last video that there is a major support and a major resistance level that are coming into play. You can see this downward sloping trend line like that. We've got this trend line like that. We have this longer term uptrend line right here as well. Really dates back quite a ways to January of 2023, so the beginning of the year, and you can see how that was breached post earnings. So we had a chance to either break out to the upside and to take out this 52-week high, or we were going to roll over and we were going to break down. In doing so, we'd also be breaking a major moving average, and right now you can see how we're testing that 200-day moving average, that black line. So let's zoom back in. This is a nice breakdown, and I believe the stock has more downside. Pretty big move right in here. Would you short it right here? Day trading? Sure. What you would want to see is you want to make sure that the market is not bouncing off of this major support level. We have mega cap tech earnings. So what does that mean? Shorts are going to be relatively passive until we hear from the mega tech companies, Apple, Amazon, Google, Meta. When those companies report, then the shorts have the potential to be more aggressive. But because those stocks have been leading the market higher, and because they comprise about a quarter of the S&P 500 value, you're not going to see aggressive shorting. So I believe that you're going to see some support and a wait and see mode until those major earnings are released. Now, if the reactions are negative after this week's earnings, and you see the S&P 500 drifting below the 200-day moving average, yes, we can still focus on the short side. Just be very careful and know that seasonality is shifting, and year-end rallies are very, very strong. So don't discount that. So let's take a look. And so what's the game plan on Tesla? Follow the market, see what the market does. I believe the market's going to sit around for the first 2 days until we start getting some of these earnings. And then you're either going to see follow through on the downside, or we're going to see a bounce. What do we want that bounce to look like? Well, what we don't want is something very steady with a drip, drip, drip lower. So here you can see how through the course of the day we just consistently made new lows, mixed overlapping candles, and a steady downward trend. Where you see your reversals and a big potential bounce is if you get a few stacked long red candles on heavy volume and very early in the day. So I'm talking an hour into trading, 90 minutes into trading. Then you see bullish engulfing candles on heavy volume. That's the type of price action that buyers are going to be looking for. That's the hard low that they want to see, the capitulation, the selling climax off of that 200-day moving average. Then we've got a chance to have a nice little year-end rally. I know everything seems super dire right now. Interest rates are moving higher. The price action is horrible. DC is in disarray. This theme occurs almost every year as we start getting toward the end of October, and then miraculously the market recovers into year end. And every single year it seems like this time is different. No, this news really, really seems bad, and I don't think we're going to see a year-end rally. And every year we continue to see that. Now, I'm not looking for anything gangbuster to where we're going to blow through the 52-week high, but I am looking for some support to form, and yes, for us to start grinding higher into year-end and to possibly challenge that 52-week high. So I'm going to still be sticking with some longs, and I want to show you those. Tesla is a short that you can consider. It's a post-earnings play. You need to see that market follow through on the downside. If we get it, that's a nice wedge breakdown that I think you'll be able to trade on the downside. Keep your trades fairly short term when you're on the short side right now. Know that you're kind of on borrowed time. So when I mentioned that we wanted to see these stacked red candles and we wanted to see them early in the day to mark that selling climax, in this particular instance, what we saw was this low that was set. How did we bounce? And I stress this all the time. You have to look at the character of the bounce. And I had done this Friday in the chat room. Mixed overlapping candles, wimpy bounce. So what does that tell us? That tells us that the sellers are still there. They're still engaged. And when we got this long green candle here that poked through the VWAP, it couldn't advance. We needed to stack another one and then another one. Okay, well, that would be a sign that buyers are aggressive. When we didn't see that follow through after 4 or 5 bars, I said, folks, we're not getting what we need here. And we've got this upward sloping trend line here that's eventually breached. We get back below VWAP. We close below the open of this long green candle. All right, you can try shorts here. We're probably going to drift lower, take out that 200-day moving average. So I'm going to put the chart up, and you'll see here, this is the 200-day moving average. This is significant support. You can also see how we've got horizontal support from 2 weeks ago, and we're continuing to test that 421 level. So what would I like to see? What would be that pattern that tells me, yeah, things are going to start shaping up on the long side? Well, you want to see that capitulation low in the next few days where we gap down. And by the way, when you see reversals, trend reversals specifically, you don't see them when the market gaps higher and goes. That's not going to get buyers excited. What's going to get them excited is when the sellers come in and they drive the market down, and then the buyers are so aggressive that they can reverse that entire move in very short order. That's what buyers look for. So the ideal setup is a gap down and a really strong reversal in the first 60 to 90 minutes of the trading day. It has to come early. And the reason for that is that it gives the market the rest of the day to recover those losses and even to push higher. I'm going to go into a 1 hour chart and I'll be able to demonstrate what I'm talking about. So when we get these big moves, so 1 hour chart I think is going to be able to help me find these opportunities. But you can see that this selling pressure right in here, we didn't see a little move higher and a little move higher and then we reverse. We had a gap down. That gap down set the low, and then that reversal is what actually sparked all of that buying. And it's the same way on the upside as well. So when you get your big reversals, well, where do they come? Well, you can see that it didn't come when the market was down and then rallied back, down and then rallied back. It came when we had this big gap up. And then that gap up couldn't hold, and blam, the sellers drove it right back down. And then the market could never recover from that, and then we continued to go down. So on a relative high, you're looking for that gap up, that exhaustion, and that big reversal. Right now, we're looking for a reversal to the upside, so what we want to see is we want to see that gap down. Hey, there's another example of it. Gap down, get the reversal, double bottom, higher low, see you later. And that's what we want to see right now. Until you get that type of price action, and it may require us to have some earnings releases from mega cap tech companies with positive reactions, then we might be able to see that type of low. And then we want to see a couple of days of follow-through buying. As soon as we see the first one, you know that you're going to want to favor the long side, at least from a day trading standpoint. If we can get 2 or 3 of those days consecutively, then you can even shift to some swing trades from the long side as well. So that's what I'm looking for. Earnings are in focus right now. That's really going to drive the price action. We've got some economic releases, but they're fairly minor with one exception. We have GDP coming out. This is the advanced look at the third quarter. This is our first glimpse at it. So very important. And on the heels of that number, Friday, we will get the PCE. Well, this is used by the Fed to gauge inflation. That's going to be very important. That number is coming out Friday. So those will be potential market drivers, but watch for those mega cap tech earnings. So let's find a bullish stock. And if I go through my searches, I'm going to actually pop up a search that yielded a couple of nice trades. And I'm going to go into custom search, and I'm going to show you a very simple search that I ran. And here you can see we've got a bullish trade signal on a daily basis. We have real relative strength on a daily and a 4-hour basis. And we've got good option liquidity. The other criteria that I wanted to add, since we're in the heat of earnings season, I'd like to have earnings at least a week or 2 out. So here I marked projected earnings date October 30th to November 30th. So this gives me at least a week to work with. I'm not right up on that earnings date. So if I want to take a swing trade, I'll have at least a few days that I can hang on to it without having to worry about the earnings release. So as I go through all of these symbols, here's one that I really like. ALL was actually pretty nice. It's a relatively choppy stock that's getting through this horizontal resistance. I'm going to take off the trend lines and I'm going to zoom out so we can take a look at it. So it's getting through this nice horizontal resistance area. Really nice volume, stacked candles in here, heavy volume, good relative strength. Yeah, I like it. I'd like to see it hold at least half of this move. Kind of that 120 area, I would want to see it preserve that. So this is a very long wick right here, but I see some horizontal was resistance. Now it's support at that 120 level. So even if the market goes down, I want to see this stock preserve that and possibly even start inching back higher to this high. This is not going to be the pick of the day. This is a really big move for this particular stock. It doesn't move that quickly. It's an insurance company. So I'm going to take a look at another one, and I like this one a lot better. This is Amgen. And I like it because it's above the AVWAP-E. It's through this horizontal resistance point right here at about 275. You can see this long green candle breaking out to a new relative high, getting through resistance. Yes, it does have some resistance here at about the $300 level, but it's still got some decent room to move up there. So here's what I would want. I would want to see this low from last week preserved, because that still preserves most of that long green candle right here. And I'd like to see the market find support. If the market can find support this week and rally strongly above that 200-day moving average, Amgen still has plenty of time until it reports earnings. So on Halloween, it reports. That's about 8 days from right now. So I like it. I like the fact that it was able to break out. Here's what the stock has done. So mind you, this is what the market has done over the course of the last couple of months. You can see down, 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 and a very steady decline at that. Let's put up our trend lines. We can see where they come into play. We had multiple trend line breaches in here. You can see this is a significant trend line right here that was tested and breached. Got a few others in play along with the 200-day moving average. So this is a critical support level. This is also where we would like to see a bounce. And you can see here that we tested that 200-day moving average, couldn't break through it, and then we get this release. So I would prefer to see a bullish type hammer where we get the flush out and the market looks absolutely horrible, and it looks like we're going to hell in a handbasket, like this 200-day moving average breach is really going to pick up some steam, and then all of a sudden we see that move reverse within the first hour or 90 minutes of the day, and then we continue to rally back and we recoup some of those losses from Friday, and that candle turns into a bullish hammer. Then we follow that up with a green candle. That's exactly the pattern I'm looking for. It's not kind of like the pattern that I'm looking for. It's exactly the pattern I'm looking for. If we're going to be looking for reversals, mamby-pamby is not going to cut it for us. It has to be exact. The alternative would be a long red candle, and then the next day a bullish engulfing candle followed by a green candle. That would also work fine for us, and that would set that low. Till we get that, favor the short side, stick with day trades on your short swing trades. Make sure that you're mindful of what the market's doing. Watch for that selling climax. Know that we're going into a seasonally bullish period, and start looking for places to take gains on those shorts. So let's take a look at Amgen's going to be your pick of the day. I like it. And we're going to take a look at a couple of other stocks that came up. ANET, see what that looks like. We'll zoom in a little bit. And there you can see it's got this resistance level, but still decent relative strength. ANF. When I go through the list, which incidentally I will do that, ANF looks very, very strong. This is a apparel retailer. That whole sector has done really well. AEO is in that group. GPS is Gap Stores. All of these retailers have had similar price patterns to this. They're actually holding up quite well. The other sector that's doing very well is energy. And so we're seeing a number of energy stocks, APA, BP, CVS, actually, I'm sorry. CVS is, I was thinking CXS. We've got MPC, MRO, those are energy stocks, NU. So the energy sector has been very, very strong. SU is another one. So I wanted to find something out of that sector, and Amgen certainly fits the bill. I look at a couple of other stocks in this list as well. GILD, too choppy. So we're going to go with Amgen. I like that stock. Some of the retailers like AEO I think are also very viable in here as well. You can see the relative strength while the market's been going down, but you want this was resistance, now support to hold, and there's your relative strength, and we've had some decent volume in here. So when the market starts to bounce, you want these stocks taking out that recent high. So that's all I've got for you today. This market is not looking particularly good. We've got a series of lower highs and lower lows, and a big breakdown here would seem very, very daunting, but I still feel that the chance for a reversal in here and then a move higher into year end is very possible. What might possibly prompt that kind of buying? Earnings would do it. Right now, the Fed is not moving. Inflation, it's been coming in a little bit, but not as fast as the Fed would like. So I don't think we're going to get a lot of relief there in the PCE this week. The move higher is pretty much going to have to come from good earnings reactions, and then perhaps into year end, maybe we finally start to see those signs that inflation is abating, and that gets us back up to the high. Thanks so much for watching, everyone. Please leave your comments. I plan on doing a video perhaps Wednesday or so. Thank you.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded